Thanks for joining me in today's video. I just have a quick little clip to share with you. This is directly from the members section and the members section of our swing charts. So if you're kind of brand new to technical analysis, you want to learn a little bit more about technical analysis, how things work, just the charts, looking and what to really do in bearish market sell-offs like these, then definitely check out our membership plan. You could go to our website at tradersfly.com. So you can see right there, tradersfly.com, and go ahead and click that memberships button. By the way, we do have a new course that just released, Understanding the Stock Market and How it Works. So if you're brand new, definitely check that out as well. And we have a book on options coming up very soon as well. But here's the membership section. You can go to swing charts. We got a coupon for you as we approach February with the Valentine's and all the love in the air. So I just want to share back some of that love. We're going to do a coupon code. We don't do coupons that often, but you can see right here, love 2020. You can get 20% off for life off that membership on the monthly plan. So anyways, check it out. Enjoy the quick little clip. None of these things are recommendations to buy or sell or trade stocks, just my own personal opinion, but gives you some thoughts, takes, and insights to the markets and just looking at technicals a little different. So enjoy the video, enjoy the clip, and don't forget to sign up. You know, things like a Starbucks here that sold off in a big way. But a lot of these things, because if you look at the previous sell-offs on these stocks, like let's say right here, or even right here, this stock does bounce back. So if you know people love their coffeeholics, chances are it should bounce back as well. So where's your shopping list? 64 was a nice price point. Now you're about 20 bucks more than that. So that's already, that's a stretch for it to come back to 64. But you could see right here, this is fairly significant support at around 80. If you get even further, you got some even more serious support at this level. Again, I'm more neutral on the stock. This is definitely stretched. So if you look at it, does that look stretched to you? Absolutely. Look, we're going at this angle just to show you. Let's go blue. No, let's go pink. We're going kind of at this angle. So you can see now what's happening is that it came back to that same angle. Then we rotated to go to this angle. Then we rotated to go to that angle. So does that look stretched? Yeah, absolutely. So that's why now we're back to this angle. And that's why I say, hey, this one still could be okay, because when you look at when you look at the longer term projections, this stock still looks okay now. And you are basically back at that healthy trend line angle. Whereas before you were elevated, you were accelerated, you were much quicker. Now you're back at that angle, and that's a much healthier angle of elevation, the steepness of the angle, rise over run, or however you want to talk about it. Let's check out shop here. Also one that's, you know, very accelerated. So this, the same thing, you know, you could start it right here, then you could go like this, and you can see we're kind of at that angle, but look, we were going even quicker. That's a fast acceleration. So a little pullback to the second. Can we get a pullback to the third? Yeah, that would be a better approach. And where's that third line up? Kind of lines up right there. So you can see that's what it looks like. So if I was just to clear the deck, we'll go ahead. Here's your support right there. Here's your resistance. This right here, you know, you might say, why is it there? This is confluence. You know, when you tell your friend to come to dinner at 6 o'clock, do they show up at 6 o'clock with 0 seconds? No, they show up 2 minutes early, 5 minutes early, 10 minutes late. You know, so not everybody's perfect, right? So the same thing here. Stocks need to find a place. So watch for this key level, as this might be a good value spot and buying opportunity, because right now we're still a bit stretched, a bit high. This is still early on the pullback, and I would say still early on the pullback, but this stock is loved, so it may get a bounce quicker than you think or want. Ultimately, you want better pullbacks, but some of these things, they're just loved much more, and then they get a short pullback, and then people buy into them very quickly. So in this case, watch out for that, as that could happen as well. You also have a little bit of support around here, 420, just with this one, slight support level, but it's a little bit more minor. Okay. You know, people love Tesla, so let's chat about it for a second. I think when you look at this one, this is a euphoria market. In part, there's also short squeezing that happens with this, but when you look at it right here, this was our breakout point. And although Elon Musk, you could say he's God or whatever the case is, the thing is people are stepping up to buy this. There's a lot of bullish volume here, but remember, Yahoo, remember Enron, big time companies, still there's always something underneath the surface, and this thing doesn't last forever. So even though right now we're doing well and the pullback slight, it's still 3%, 21 points, not big compared to the, you know, it's went to really it went from 200 to 600, tripled in just a couple months. That's a huge run. This is a very euphoric market and stock. Sometimes, and I'll just give you this big final point, sometimes when you start seeing companies move like this, it starts and creates a movement in other companies like this, which eventually can lead to more euphoria. And that is almost, you could say, the beginning of the bubble, or the beginning of the euphoria, or the beginning of that bubble. So that's why you just be a little more careful. This is very interesting that it's moving so quickly, but it is very euphoric, and a pullback's in order, but this can last for a lot longer than we think and we anticipate. So just be careful, step aside on these things, don't chase them, get your sanity back, go to something a little more normal, and then you know, come back into it a little bit later when things calm down a bit. So anyways, that's my thoughts and takes on the overall big picture market. If you look at the VIX here, you can see we are closer to that, just to show you, to that 20 zone now, which means there's more panic in the marketplace. And if we go here to the weekly, well, let's just do 2-day. You can see this used to be kind of our main average, and this used to be kind of our lower end. Now we're at that upper end, and really we could get to an even larger end at 21. And yeah, can we go higher with the VIX? Yeah, which means there's going to be more selling to take. Can we go lower? Yeah, but we're right in the middle. Good time to sell iron condors or sell vertical puts. You know, start looking for longer term retirement strategies, but do so cautiously, because this thing can continue to pull back for quite a while. You don't know. And you don't know if it's the beginning for big recessions too. All right, so thank you so much for joining me. Remember, hit the subscribe button by clicking the face icon right here, or join our newsletter list, or join the membership by clicking the link over here. Enter your name and email address there, and then you'll also get some news and insights to any special announcements as well. Thanks again, and I will see you next time.